What is going on, Bitcoin fam? Welcome back to the Bitcoin Bulletin, where we bring you the news that moves the market. Get ready for a rapid-fire update that's going to blow your mind. We're kicking things off with MAGACOIN Finance. This Ethereum-based crypto project is absolutely crushing its presale, and guess who's talking about it? None other than the Bitcoin and XRP communities are buzzing about MAGACOIN Finance's incredible momentum, sparking major altcoin outlooks for 2025. Next up, the economic indicators are in. We're diving deep into how Bitcoin is reacting to the latest U.S. Consumer Price Index data. Did inflation hit expectations, and what does this mean for the Federal Reserve's next move? Bitcoin's price is holding steady, but the numbers are crucial for understanding where interest rates are headed and how that impacts your crypto. Now, let's talk corporate strategy. JPMorgan is issuing a stark warning today, highlighting a cautionary signal for companies holding Bitcoin on their balance sheets. This comes after Strategy, Michael Saylor's firm, was surprisingly snubbed by the S&P 500 Index Committee, raising serious questions about the future of corporate Bitcoin treasuries. And the momentum continues. Bitcoin's price has just breached an impressive $114,000, and the reason might surprise you. U.S. spot Bitcoin ETFs have just recorded their highest inflows in 8 weeks. We've got all the details on what's driving this surge and what it means for your portfolio. Stick around for all this and more, right here on Bitcoin Bulletin. Make sure you're subscribed and hit that notification bell so you never miss an update. MAGACOIN Finance Presale ignites crypto conversations. Get ready for a massive surge in altcoin interest as MAGACOIN Finance, an Ethereum-based cryptocurrency project, announces accelerating momentum in its ongoing presale. This isn't just any project launch. It's making waves and being discussed within the core communities of Bitcoin and XRP, indicating a significant shift in investor focus towards promising early-stage projects for 2025. The MAGACOIN Finance presale is structured around scarcity-driven tokenomics, meaning each stage offers a reduced supply, naturally driving demand and rewarding those who get in early. This smart design has led to each presale round closing faster than anticipated, fueling investor confidence and building substantial buzz. With Bitcoin as the digital asset king and XRP revolutionizing cross-border payments, the expansion of these communities into altcoin discussions, particularly around diversification, brings MAGACOIN Finance into the spotlight. Analysts are pointing to its strategic timing, scarcity model, and this broad community recognition as key factors that could sustain its upward trajectory. The project is gearing up for major listings in 2025, aiming to solidify its position as a top altcoin contender. This inclusion in Bitcoin and XRP community outlooks is a clear signal that attention is rotating towards innovative new entrants in the crypto space. The buzz around MAGACOIN Finance, coupled with its accelerating presale progress, positions it as one to watch in the upcoming crypto cycle. Don't go anywhere, because the market is reacting big time to economic data. Next, we're breaking down how Bitcoin is holding its ground after the latest U.S. inflation report and what it signals for the Fed. Bitcoin holds its nerve amidst U.S. inflation data release. Bitcoin showed resilience this Thursday, maintaining its price level despite the release of crucial U.S. inflation data. Markets have been keenly parsing these figures for any hints about the Federal Reserve's future monetary policy decisions, making this report a pivotal moment for both traditional finance and the crypto world. The U.S. Consumer Price Index, a key measure of retail inflation, came in at 2.9% year-over-year for August, precisely matching market expectations. This figure follows July's reading of 2.7% and provides a clearer picture of the inflationary landscape. Simultaneously, the Producer Price Index, which tracks wholesale inflation, unexpectedly declined to 2.6% year-over-year, significantly underperforming the 3.3% forecast. This softer PPI print has bolstered expectations for potential Federal Reserve rate cuts, injecting a dose of optimism into risk assets like equities and cryptocurrencies. Analysts at Bitunics noted that ahead of the CPI release, Bitcoin faced considerable liquidation pressure around the $114,000 mark, identifying it as a key resistance zone. They suggested that dovish CPI data could propel BTC above this level, potentially triggering a short squeeze and accelerating a move towards the $115,000 liquidity zone. Conversely, stronger than expected inflation could lead to a higher US dollar index, DXY, delaying rate cut expectations and pushing Bitcoin towards support at $111,000, with a potential retest of the $108,500 109,000 area if that level breaks. Traders were advised to scale back positions before the data release, acknowledging that while PPI was soft, CPI could still influence prices. The market is now closely watching Bitcoin's key resistance at $114,000 and support at $111,000 to navigate the anticipated volatility. A hotter CPI typically pressures risk assets like Bitcoin, increasing the likelihood of tighter monetary policy and a stronger dollar, while softer inflation could boost crypto by increasing the odds of upcoming rate cuts. But what happens when corporate giants get involved? The game could be changing. We're diving into JPMorgan's latest take on corporate Bitcoin treasuries after a major snub by the S&P 500. S&P 500 snub sends warning to corporate Bitcoin holders, JPMorgan. In a move that has sent ripples through the corporate crypto world, Strategy's application to join the prestigious S&P 500 index was unexpectedly rejected, despite meeting all technical requirements. JPMorgan analysts are interpreting this discretionary decision as a significant cautionary signal for companies increasingly adopting Bitcoin as a treasury asset, viewing them as de facto Bitcoin funds. This rejection is a notable setback not only for Strategy, led by Michael Saylor, but also for the growing cohort of corporations that have mirrored its strategy of accumulating Bitcoin on their balance sheets. JPMorgan's analysts, led by Nikolaos Panagurtsoglou, highlighted in a recent report that while Strategy's inclusion in other major indices like the Nasdaq 100 and MSCI had previously provided Bitcoin with a discrete entry point into both retail and institutional portfolios, the S&P 500 decision might represent the ceiling for this trend. This could prompt other index providers to reevaluate their inclusion criteria for Bitcoin-heavy companies. Adding to the pressure, recent reports suggest that Nasdaq has begun mandating shareholder approval for companies looking to issue new stock, specifically for crypto acquisitions. Strategy itself recently signaled a shift by abandoning its previous no dilution pledge, indicating a potential willingness to issue shares at lower multiples to continue its Bitcoin purchasing strategy. This comes at a time when corporate crypto treasuries are facing headwinds, including weakening share prices and a noticeable slowdown in fundraising volumes, with both equity and debt markets showing declining investor appetite last quarter. This waning investor enthusiasm raises critical questions about the long-term sustainability of the corporate Bitcoin treasury model. While some firms are exploring more complex financing methods like Bitcoin-backed loans and token-linked convertibles, the increasing risk premium associated with pure Bitcoin holding entities might push investors and index providers to favor companies with tangible operating businesses, such as cryptocurrency exchanges and miners, over those solely focused on accumulating Bitcoin. But don't let that news fool you. The bulls are back in town. We've got Bitcoin price surging and ETF inflows hitting an 8-week high. You won't want to miss this. Bitcoin surges past $114K as ETF inflows reach an 8-week zenith. Get ready for some bullish momentum. Bitcoin has staged an impressive comeback, soaring past the $114,000 mark and reaching its highest level since late August. This significant price surge coincides with a massive influx of capital into U.S. spot Bitcoin ETFs, which recorded their highest daily inflows in a staggering 8 weeks. On Wednesday alone, U.S. spot Bitcoin ETFs saw inflows totaling an impressive $757.1 million, according to SoSo Value data. This brings the total accumulation for September to a substantial $1.39 billion. Analysts attribute this powerful inflow surge largely to the unexpectedly positive Producer Price Index, PPI, numbers released earlier, which significantly outperformed market expectations. This economic data point has boosted confidence and signaled potential shifts in monetary policy. Dark Frost, a pseudonymous analyst at CryptoQuant, described Bitcoin's push beyond $113,000 as an encouraging sign. The uptrend was further validated by a notable 6.6% rise in open interest, reaching $43.3 billion, and positive funding rates, indicating strong bullish sentiment among traders. In a fascinating contrast, while Bitcoin ETFs are experiencing a flood of new capital, Ethereum funds have seen a negative net flow of $668.72 million for September, suggesting a potential capital rotation pattern, where funds are shifting back into Bitcoin from Ether. This rotation is widely seen as a strategic move by investors anticipating the Federal Reserve's September 17th rate cut decision. With worsening jobs data in recent months putting pressure on the Fed and core inflation hovering above the central bank's target, investors are increasingly speculating on a larger-than-anticipated rate cut, possibly a half-point reduction. This expectation of increased economic stimulus is a significant tailwind for risk assets like Bitcoin. The CME FedWatch tool indicates a 92% probability of a 25 basis point cut, with an 8% chance of a 50 basis point reduction, further fueling this bullish outlook. That's all the breaking news for today, but we've got a quick recap coming up. Don't go anywhere. We're hitting you with a lightning round of today's top stories and a full call to action. And that's a wrap on today's Bitcoin Bulletin. We saw MAGACOIN Finance making waves in the presale space, attracting attention from Bitcoin and XRP communities. Bitcoin held steady as US CPI data landed in line with expectations, while JPMorgan issued a warning about corporate Bitcoin treasuries following Strategy's S&P 500 snub. Finally, Bitcoin breached $114K on the back of record ETF inflows. If you found this update valuable, smash that like button, subscribe to Bitcoin Bulletin for all your crypto news, hit the notification bell so you never miss a beat, and join the conversation in the comments below. Follow us on all social platforms to stay connected. We'll see you in the next one.